In this video, we will code the Bollinger Bands strategy with Python. To follow this video, you will need some basic understanding of Python, some basic understanding how markets work, and also we will work with the libraries MetaTrader 5, Pandas, and Plotly. We will cover what Bollinger Bands are and how you can trade Bollinger Bands. Then we will jump to Jupyter Notebook and calculate the Bollinger Bands indicator ourselves. Also, we will backtest the strategy in Jupyter Notebook to see how the strategy performed in the past. Then, we will jump to PyCharm and code the strategy with the MetaTrader 5 library. And in the last step, we will deploy the strategy ready for trading. This is an example of the Bollinger Band indicator. It consists of a simple moving average, a lower band, and an upper band. The simple moving average is calculated by taking the average value of recent prices. In Bollinger Bands, that is usually calculated using period 20, which is the last 20 close prices. The standard deviation, or sigma, is a measure of variance, and in Bollinger Bands, you usually use two standard deviations, which contains 95% of all prices within the bands. So in our example, the lower band is two standard deviations below the simple moving average, and the upper band is two standard deviations above the upper band. So how can you trade Bollinger Bands? What we know is that price remains 95% of the time inside the bands. And for that reason, this is a good opportunity to try developing a mean reversion strategy. When prices are low, it increases the demand, and when prices are high, it increases supply. For that reason, if the price is below our mean, we want to buy, and when the price is above our mean, we want to sell. Therefore, we want to create a strategy that looks something like this. We want to buy when the price is low and sell when the prices are high above the mean. Here's a strategy. We will trade on GBP/USD daily chart with Bollinger Bands period 20 and two standard deviations. The strategy will buy when price closes below the lower band, sell when the price closes above the upper band. For stop loss, we will set it to 3 standard deviations and take profit to 2 standard deviations. Only one position is allowed at the same time. Let's now go to our Jupyter Notebook to analyze the strategy and perform some backtests. We are now in our Jupyter Notebook, and to start, we will need to import the following libraries: MetaTrader 5, Pandas, Plotly Express, Plotly Graph Objects, and DateTime. So let's import it, and we will request data from the MetaTrader 5 platform at IC Markets. And to do that, to connect to the platform, we need to enter mt5.initialize. Let's run that as well. Get the OHLC data from GBP/USD for a time frame D1. We will use mt5.copyRatesRange. So here we will pass in the name of the symbol. Here we specify the time frame, and I've decided to perform a backtest starting from 2020 until today. So after running this, we see a list of OHLC data, and to make it a little bit prettier, let's convert it to a pandas data frame. So I will pass the bars into pd.dataframe. Now we have a nice table with columns time, open, high, low, close. And as you can see, the time column is in Unix timestamp. And what I'd like to do is convert that into date time. And we can do that by simply converting the time column with pd.toDateTime. And by doing that, we now see the time column in a time format. So to show you what the prices look like, we will use Plotly, and we will plot a line graph with the close prices. So Fic is equal to px.line with passing the df. On the x-axis, there's the time, and on the y-axis, there's a close price. So let's run this. These are the close prices on GBP/USD starting from 2020 until today. We see that on GBP/USD there was this big drop, and then it gradually was for a long time an uptrend, and at the current moment we are now in a ranging market. So in this part we will calculate the Bollinger Bands using pandas. So to calculate the simple moving average, we will define df SMA is equal to df close, and to specify the period 20, we use dot rolling 20 in pandas, which is the same as saying period, and to calculate the average price, we use dot mean. The standard deviation is calculated similarly, but instead of mean, we use STD, which is a very nice way to calculate the standard deviation. The lower band is defined as 2 standard deviations below the SMA. So DFLB, which stands for lower band, is equal to DF-SMA minus 2 times DF-SD, which is our standard deviation. And to calculate our upper band, we use the same. So UB for upper band is equal to DF-SMA plus 2 times DF-SD. What we also do is we will drop the non-values, because to calculate the SMA and the rest of values, we need 20 bars. And that means that for the first 20 bars, we will have no SMA values. So I'm just dropping the first 20 rows with drop now. Let's see what this looks like. And here we can see on the right side, we have new columns created for SMA, for standard deviation, for lower band and the upper band. To show you what these values looks like on the chart, we can plot the Bollinger Bands with plotly express dot line, and this time we are using the same plotting as here, but instead of passing only the close prices in the y-axis, we will also pass in the SMA column, the LB column, and the UB column. So let's run this. And now we see the Bollinger Bands on our chart as well. The green line is the lower band, the purple line is the upper band, and the red line is our SMA. Alright, so now we have all the indicators calculated to start our backtesting, and we also want to create a signal column. That means that a signal column that will tell us if we should buy or sell. And the condition to buy or sell is simple. And here I wrote a function to find a signal, and it takes 3 parameters into account. It takes the close price, the lower band, and the upper band. So if the close price is below the lower band, it is a buy signal. And if the close price is above the upper band, it is a sell signal. Using numpy.vectorize and passing this function, we can calculate the signal. And here again, so the close price is df close, the lower band is df lower band, and the upper band is df upper band. So let's run this. And by running this, we now have a right column with the signals, when to sell and when to buy. To create a backtest, I've created 2 classes, a class position and a class strategy. For this video, however, it is a little bit too complicated and advanced to explain it in a single take, so I will save this for another video. Just so you know, the class's position and the class strategy are created to run the backtest. So I will create positions in the background and then evaluate the profits of those positions based on the historical data. So let's just scroll down and run the backtest. So I've created a class Bollinger strategy that is taking the strategy class, and I'm passing in the historical data. This parameter is the initial capital of your account, and I've set it to $10,000, and this value here represents the volume. So this is 100,000 units on GBP/USD, which is the same as one lot. Then the result of the backtest is saved in the result value here after running Bollinger strategy.run, which is running our backtest. So let's first find the classes and run the backtest. So now we have a list of positions in our results. So we see when a position was sold and opened according to our backtest. On the right side, we see the profit of each position, and here we see the P&L of our initial of our balance. So this chart here, we can already see that the strategy was profitable, that we made around $7,500 by trading strategy. And to show you what it looks like on the chart, we can run this. So we are again creating a Plotly figure with close SMA, lower band, upper band, but we are also adding the results of our individual positions, which is done here by looping through each individual trade and adding the plot on our chart. So let's run this. So here we see the list of positions that were opened and closed through our backtest. So let's, for example, look at the beginning here. Here we see that here the close price closed above the upper band, which triggered a sell order, and this resulted in a small profit. Again, we had a close below the lower band here, which then closed in profit as well. We had 3 profits in a row, but then there was a major drop. So during this trade, price kept going lower and we closed in a loss here, unfortunately. But then the strategy decided to buy later at this point, and then we made a bigger profit by closing right here. Then we were in an uptrend, so this period was not that good, I would say. So we had a trending market, and mean reversion strategies do not perform very well in trending markets. So we had 2 losses in a row here, then we got 2 profits here, and then another two losses here. Here we see the market ranging a bit more. So we have 1, 2, 3, 4 profits in a row, and then we closed with a loss in our last trade here, which was very unfortunate. But by looking at the P&L chart, which we can do here, we can see our balance updating with every trade. So at the beginning, we had this little drop here. Then we made a big profit, and then we were ranging for about a year, and then we had a winning streak again, and now we are with the P&L of 17,500, so we made a profit of 75% over the year. I would say that the volume specified in this backtest is a bit high, as it is very risky, so maybe I would tune it down a bit for a 10K account. But we see that the Bollinger Bands strategy was profitable for the past 2 years, which is great to see. Now that we have analyzed the strategy, let's go to PyCharm and code the strategy in Python to start trading through MetaTrader 5. MetaTrader 5 is a trading platform where you can trade Forex, cryptocurrencies, stocks, indices, and commodities. MetaTrader 5 offers trading through Python as well as its own algo trading language called MQL, through which you can create your own strategies. If you want to open an account with MetaTrader 5, you can find an affiliate link in the descriptions. We are now in PyCharm IDE, and I will now show you how to code the strategy in Python. So let's import MetaTrader 5, pandas, and time. And here we have the strategy configurations for our strategy. And here we see the symbol GBP/USD. We have the time frame D1, which is a daily time frame. For the volume, we will trade 1 lot, and this should be a float. Here in deviation, which is the deviation for maximum order slippage, is set to 20. The magic number of our strategy is set to 10. And to calculate the Bollinger Band, we need the SMA period, which is 20. And to calculate the bands, we set standard deviations to 2. Our strategy uses a take profit, which is equal to 2 standard deviations, and a stop loss, which is 3 standard deviations. I've created a function to send market orders to the MetaTrader 5 platform using the MetaTrader 5 library, which is taking the symbol, volume, order type, deviation, magic, stop loss, and take profit as parameters. Then they're wrapped here inside a request dictionary, which is then passed to MT5 order send to send the order to the market. Then I've created a signal function that will generate signals for a strategy, and this is the same as in Jupyter Notebook, where we request bars from MetaTrader 5 platform using copy rates from POS this time, and I need an SMA period of 20 to get the bars. Then we will pass it to a data frame, and the SMA is calculated using the close prices by taking the mean values of those. And the standard deviation is the series of close prices dot std. The lower band is our SMA minus number of standard deviations times our standard deviation, and the upper band is SMA plus the standard deviations times the standard deviation. Then we need the last close price to compare the upper band, lower band to generate signal, and that is simply the last row in our data frame, and we take the close price. So the logic is very simple. If last close price is below the lower band, we want to buy, and we will also return the standard deviation for future calculations. And if the last close price is above the upper band, the signal is sell, and we're also returning the standard deviation. Otherwise, we are returning an empty list. Then we connect to MT5 using MT5.initialize, and if we initialize successfully, I've prepared print statements like connected to MetaTrader 5, and it will also print out the login of your trading account and the server name of your trading account. Then we create a strategy loop. Inside this loop, we will check for signals, and I've also added a condition. If there are no positions open, then check for signal and also get a standard deviation from the getSignal function. Then our tick is equal to mt5.symbolinfotick. This one will be important to determine the placement of our stop loss and take profit based on the current tick price. And if the signal is buy, we then send a market order with these parameters. Here, this is the volume, which is 1.0, so we can also change that real quick. So inside this market order, we have the symbol, volume, order type, the deviation, magic, stop loss, take profit. And for the sell signal, it is the same, but on the sell side. Then we have a sleep function, time.sleep 1, which means that it will check or return to loop after 1 second. So we are checking for signals every 1 second. Let's now test the strategy. And on the right side, we have our trading platform. And on the left side, we have our code. And I would like to add some minor adjustments because the daily time frame is a long-term time frame, and to not let you wait weeks and months for some results, just for the sake of demonstrating whether the strategy is working or at least functioning correctly, let's change the symbol to BTCUSD because today is the weekend and we want to trade something, and we'll set the time frame to M1, which is the 1 minute time frame. That way we can check in the MetaTrader 5 platform if the strategy logic is working correctly, and you can always change the symbol and the time frame for your own, which you prefer. So I will now fast forward this video and then you can observe how it works. So I will now run this strategy. So we are connected to the MetaTrader 5 platform with this login and this server. And all we have to do is to wait for trading signals. That means that if this candle closes above or below any of the bands. Let's now fast forward. So we are now trading Bitcoin fast forwarded, and currently price is approaching the lower band. If price closes below the lower band, we will trigger a buy order. This just happened, and we've set take profit above and stop loss below. So now we're hoping that price will return back to the mean. Remember, our stop loss is 3 standard deviations below our buying price, and our take profit is 2 standard deviations. After a while, price will return back to the mean, and it will eventually hit our take profit. Now that we know that the strategy works, let me also provide you with some useful information. The strategy works very well in ranging markets, but performs poorly in trending markets. You should not deploy strategies blindly. You should always analyze the market conditions and deploy them strategically. You can download the code for my Jupyter notebook and my Python code by following the links in the descriptions. Please like and subscribe if you enjoyed the video. Thank you for watching.